Hi, this is Mark with your analysis for the week commencing 27th of February. Difficult trading at the moment. We are technical analysts and we are trying to analyse from charts past movements and predict where they're going to go next. The difficulty is that the Middle East at the moment is a boiling cauldron, particularly Libya, and Libya is a big supplier of oil to Europe, and therefore it's difficult sometimes to rely on your indicators. Having said all that, when you look back at the end of last week, lots of things did behave technically. Just when you were in the trenches in the middle of the week, it didn't quite seem that way. But there are clues as to possible reversals on lots of pairs at the moment. This is the Euro-Yen on the daily, and I was showing you last week how we had MACD divergence on the daily, and there are videos explaining this in the educational section. Basically what this says is if MACD is going down at the time up here, you look up further up from MACD here and here, those 2 points are identical height-wise, therefore MACD should be the same. The theory is that MACD will give you the clue that price is going to go back down again, and stochastics were rolling over as well. What I said last week is I said that be careful with this, and it was tricky because we were at a double top of 114, and what happened then on the Monday? We got a pin bar reversal candle with the Bollinger Band closing. And what I'd said during the week was if the Bollinger stayed open and it looked positive, we would look for a break up, but if it moved down you could then consider a short, perhaps only as far as 112.20. On 3 occasions last week it slammed into 112.20, so you could have taken the short or you could have taken the longs here, but this is what's happening. We are stuck now between this 200 up here and we are stuck down here at 112.20 again. Just below here, if it breaks, we've had a 5-8 cross, we've got the MACD and everything pointing down, you then have 111.80. For shorting purposes, if it gets back up around 113.20 area, I would be interested to short this on Monday. If it starts to break further down, I need it to break and close below this daily 55 EMA. And also watch the Bollingers for clues again. If it closes up, it would give more support to the theory of a bounce. If it opens, it would suggest that this has further to fall. And Bollinger Bands have been extremely important in recent weeks. This is a euro. I have on my chart here, this was the position I was looking for last week. This was Sunday's analysis up here, and I was saying that if we got a pull back to 135.20, I believe it was, that we would look to long, and it came down perfectly. I think it came down to 135.19. So we were spookily accurate last week. This one then moved away and went, I think, a total of almost 300 pips. There we go. What it did do then is struggled at this other line that I'd had in place for weeks, and this is all support and resistance in EMAs, guys. And what it did then is it broke through, closed above, pulled back down. It meandered around this line. And what I'd suggested during the week, the way to trade these things was to be looking on 4-hour charts. And you see it kept coming down, moving away, coming down, moving away. But once again, we have MACD divergence at a potential double top here on the euro. Stochastics are beginning to turn over, but I just mentioned the euro is more susceptible to the Libyan crisis perhaps than the rest of the world. It is potentially dangerous. If it comes back down here again, yes, I would definitely be looking to long again. Whilst it's up around here, I am very wary about longing. If it breaks and pulls back down again, then we look for short. The other thing is this is the first week of the month coming up, therefore we have NFP. There is a humongous amount of news this week, and what I tend to do on NFP week is try to make my money on Monday, Tuesday, and then leave it to everybody else to fight it out in the week. But as I say, look at your calendars. There's too much news for me to tell you about, but with interest rate statements, job news, Bernanke's testifying as well, ECB job rates, and then the dreaded NFP on Friday. So watch carefully. This is the pound dollar on the weekly, and we have here, as I've shown you in recent weeks, we have MACD divergence. And I said to you last week that 163 will be difficult because it was a strong area of previous support and resistance. And on the daily, what I was saying to you was that I would be very interested along at 160. It took all week to get down near here, and it was very late in the day, so I haven't taken this. What I did say was to consider a long at 160.650, and this happened late on Friday. And here you go, price came down, broke the Bollinger Band, which is a clue, initially stopped dead at 60.65, broke through and bounced back up a little. This again, you're in a scenario here. If this Bollinger Band stays closed as it is now, I will definitely look to long here at 160 tomorrow, because previous support and resistance, huge whole number, the 55 EMA not too far below, but we have MACD divergence on the daily, and we have a 5-8 cross here. So again, it's messy. And what you could well find out is, barring any huge spikes because of the oil situation, is price simply bouncing twixt these two areas again. If it breaks down, then later in the week, then we will be looking for a pullback with a view to a short. However, I am more of a mind to long this pair, and my main area is 160, and then back down here 158 is another important area. Aussie dollar, another one that has MACD divergence on the daily chart. Big move up last week. This was a sickener for me. Took me out down here by 2 pips and then promptly moved up 200. Get over it, Mark. It's now coming up to a double top, so we have the same situation, and there is a huge amount of Australian news. But if you look on the weekly chart, the Bollinger has swung open, and this is a massive pin bar reversal candle. This is a sign of price to move up and shoot up. So watch the news carefully, and you will simply have to trade around the news. And the other thing to watch carefully is gold. Because of the oil situation, then scared money runs to gold. And gold as a form of a safe haven, gold has come back up. The head and shoulders is now negated, but gold around here, watch around here for clues for price to bounce back down, because it will be a triple top. If that starts to bounce back down, then you would expect the Aussie dollar to do likewise. This is the CAD. The CAD, because of oil, I said to you during the week, I suspected this was going to break. And whereas counter trend traders would be looking to take bounces back up here again, what I suggested to you was, because of the oil situation, and because Canada is one of the big suppliers to the US, and because of all the chaos, this could fall, and I suspect this could go all the way to 90 at some point this year. Now, it's at the lowest it's been for a number of years. We've had a major breakout, so what do? You look for a pullback. This is the weekly. Weekly Bollinger, as I showed you during the week, was wide open, like a trapdoor, allowing price to fall through. We are at the moment held by this monthly. Watch carefully at market open. It's not the monthly candle close really till Monday, but this could start to bend tomorrow. And if this swings open Monday, this could fall like a stone. So, how would you play it? Well, for me, I need a pullback. And the pullback would be to somewhere, and this is tricky, but somewhere around 98.30 or almost back up to 98.60. So anywhere around this area here, I will be interested to short. Once more, look carefully at news. Swissy is another safe haven currency, and the Swissy is now at the lowest point ever. The US dollar against the Swissy, it fell on Friday. Wednesday it came back down to this treble bottom, and again, I'd said earlier in the week, counter trend traders would be looking for a potential long, not for me. Once more, we have the Bollingers wide open, and we are riding the Bollinger Band on the weekly, and the monthly is wide open. Once again, we need a pullback. The logical area is here, back to 93.20 area. It may go a little further. If it goes further, let's put a trend line in for last week, and the trend line would be perhaps all the way back up to 93.70, 93.80. But that is the way I would want to play it. A breakout followed by a pullback, which we actually had on Friday, with a view to a further fall. Dollar yen, I said last week that consider a short at 83.30, and price was here. What did it do the next day? It pulled back up and moved away, and that went to 160 odd pips. We're now clearly moving down, but we are coming to a double bottom, and we're also coming to a trend line. So this area here will be very important. Once again, the best way for me would be to hope for a potential pullback, and 82.40 would be a good area. Previous support and resistance, the 55 and 34 are rolling over. If it pulls back to here, I will be interested to short. Aussie dollar yen, I was looking for potential long at 82.85 last week. It piled straight through it, but where did it stop? Almost to the pip, back down here at these EMAs that we've had on here for ages. And again, the move back up was well over 100 pips. Where did it stop? To the pip on the monthly EMA. So pay attention to EMAs. EMAs are a mobile form of support and resistance, and you need to be paying attention to them. Final one here is the EuroGBP, and Omar from Texas, long-term member, sent me an email at the weekend saying, is this a triangle on the EuroGBP? Yes, it is. And you will know that the significance of a triangle breakout is that the size of the triangle, in this case almost 2,000 pips, should be reflected in the move out of the triangle, either direction. This is a monthly. Now, hopefully it will break out by tomorrow, but if that's not going to happen, over the next month or two we will be looking for a break and a close, either up or down, with a pullback with a view to a major move on the euro pound. For tomorrow, last week we were looking for potential shorts at 85, and then later in the week I just said, look guys, I'm leaving this, too messy, not for me. What did it do? It came up, it stopped almost the pip at 78.6, and 8600 here is where it got up to. What stopped it? The Bollinger Band. Watch these Bollingers. They are important. If it opens tomorrow morning, then I would be more interested to long. If it stays closed, I would leave it. I don't want to short into all these EMAs. And as I've just shown you, EMAs are very important at the moment. Best way to play this, I think, is we play intraday. I will be back with you tomorrow with a more detailed analysis, and I think we'd also be looking for 4-hour moves as well. Go down to your charts, have a look at the 4-hour chart and see where the EMAs are. For example, this is on the euro, and last week I was showing you how the 200 EMA was important. If price gets back down to here, you would be looking for longs. And as you see here, the 34 and the 55 are important. So, support and resistance, but my best advice is only being one trade at a time, because if the situation, God forbid, gets any worse in the Middle East, suddenly you could see huge spikes on many, many pairs. And final reminder, watch for the news. There is a boatload of it this week. Have a great week.